morning, ladies and gentlemen. Thank you for joining Ascending Abundance YouTube channel. My name is Pavel Sverdlin, and I explore on this channel various ways of making more money with the existing money that you got through investing in real estate, crypto, equities, stocks, anything basically that could make us more money and live comfortably and achieve that financial independence a little bit faster. I'm not a financial advisor. I'm not a financial planner. I'm not accredited as one. I am, though, a CFA, Chartered Financial Analyst, and a CPA, Certified Public Accountant. And therefore, I know quite a bit about investments, stocks, and crypto, and taxes, and various other strategies. However, I am recording this video mostly for myself, as well as to share those ideas with the broader public as an idea only. I welcome any kind of criticism. Please do not take this as any advice whatsoever. Now, with this, the topic today is how much the Bitcoin actually costs. There is a correlation in my mind with the cost of the product and the earnings of the company that is producing that product. If it is not profitable to produce something, it will not be produced, or it will go up in price. There's really no other alternative. If it costs you more to produce a tire for a car than the tire sells for, either you stop producing eventually, or you're going to increase the price of those tires. And that's true across the market, because if everybody's losing money, they will either jack the prices or stop producing. So the cost of Bitcoin is something that I really wanted to understand. There's this whole talk about halving next year, about April, May. The mining companies are going to make less money, or less Bitcoin, I should say. They're going to make less Bitcoin precisely by half by doing what they're doing today. So if the price of Bitcoin does not go up, they will probably just lose money, and they can operate in loss for a year or two. But eventually, either Bitcoin just dies, or it has to go up in price. But how much? That was my question. So I just looked at Bitcoin mining companies on Google. A few came up, Marathon Digital, Riot Blockchain. I clicked on a couple of these links and kind of came up with 3 companies that seem to be the largest. The next thing I've done, very simple, you just gotta go Riot Blockchain, Investor Relations, go here, click on the company, go to the Investor Relations, SEC filings, and then click on their 10Q. And I have it right here somewhere on a separate screen. So, is this them? Marathon Digital, there you go. Or Riot, or which one? Riot. So I've looked at their balance sheets to see if they're actually, well capitalized, and they seem to be. For example, Riot Platforms got quite a bit of assets, and only a fraction of that is liabilities. Everything else is equity. Now, granted, they're losing money because accumulated deficit is growing. So that tells me this company is not profitable. Going into the income statement, I could see that their revenues are, reputable, although they're lower in 23 than in 22. Then I looked at the cost of producing this revenue. So cost of revenue is mining, data center housing, engineering. So all of these are truly costs of just producing, mining Bitcoin. Then there's selling and administrative expense, always, right? Like you have to have your premises, you have to have your people, you pay them salaries, you have to pay for connectivity, network, whatever else. And then there's depreciation, amortization. Now, in analysis of REITs, real estate income trusts, I was saying that depreciation is not a true expense, because your building is not really depreciating, it's actually appreciating in value. And depreciation expense in real estate firms, it's really nothingness. In mining company, I would say depreciation is a true real expense, because they have to upgrade their hardware, their networks and whatnot every so often, and that's probably pretty often, to just keep up with the technological advances. So this is a true expense. To verify that it is, I would go into the consolidated statement of cash flows, and in the operating cash flow, they back out depreciation amortization right here. They back it out because it's not a true cash outflow charge. That's how the cash flow statement is done. But then I look at how much property and equipment did they have to buy? And it's 51 against 59. Okay, in this particular case, it's a little bit smaller, but I still think it's a very close approximation of what they truly need to invest. So looking at those three companies, what I found is that on average, the revenues, so Cipher Mining, Marathon Digital, Riot Blockchain, randomly picked just by market value of Bitcoin miners. Compare it to the mining costs, their equipment costs, and general administrative costs, they're all losing money. And that shortfall is different for different companies, but that's just 1 quarter, right? Like it's a 1 quarter of analysis, not something that I would base a lot of value in, but it gives us a perspective, gives us some sort of understanding. That's why I want to look at three companies to really see what's going on. So their shortfall is 70, 30, and 85% of their costs. How long can a company operate at this loss? Probably a couple of years. They're well capitalized. They can continue losing money, but it cannot go on forever. So then I looked at the cost of Bitcoin, as in what it should be. In Q1 2023, I should say, just for the records, in Q1 of 2023, the average Bitcoin price was 23,000 US dollars, give or take, 22,750, something like that. So what does it need to rise by so that all these companies at least break even and maybe even start making money? Otherwise, they shut down their operations years from now. Like, there's no excuse. So on average, based on these three values, I say that we need the price of Bitcoin to go up by 60%, which gives us a price of about $37,000. And that's for these companies just to break even. So I would say Bitcoin has every chance to go up to about 36,000 because eventually miners are just going to stop producing, stop mining, stop selling that Bitcoin that they mined. Otherwise, it's not profitable to them. It may take a while, it may take a few years, they may be able to operate for a little bit, but then, slowly they're going to just die off unless Bitcoin goes to this price. Now, the caveat to that, so, and just to continue with the train of thought, caveat I'll cover later, there is a halving in a year, so they will start making half of this in less than a year. And unless the price goes therefore double, so times 2, unless the price goes to 74,000 roughly, it is not profitable for the miners to mine. How they're doing it, I don't know. Why they're doing it, I don't know. They can continue mining at a loss. It could take them a few years, but unless we see Bitcoin in 2024, 25 at 75K, these particular companies are not going to be making any money. So back to the caveat. These companies are publicly traded in the United States. That means their compliance costs are high, their accounting costs are high, they have to hire people officially, pay taxes on their salaries, they have to buy all of the licensed equipment, etc., etc. So their costs, by definition, are higher than those companies that operate overseas. They're probably deploying cheaper electricity, they're probably buying not branded equipment. They might be able to hire their people at a fraction of the cost that the US companies can hire. So some of these foreign companies may be able to operate at much lower costs. Would those costs be 70-60% lower than the United States? That I don't know. I have no idea. There's always someone who is willing to operate just at the mining costs level, like they're just paying basically the mining costs. And maybe a little bit of general and administrative, and they don't think about their equipment, they just want to keep operations going, they're hoping for the price to rebound. So some of these companies, especially the overseas ones, could sort of disregard equipment and just operate the variable. That is all possible. However, for the healthy sort of market, I would be willing to say, well, let the Bitcoin price go, maybe, let's take a safety margin. Let's go Warren Buffett way. We take 30% off. That means the break-even price of Bitcoin is actually 70% of what I'm seeing here. So that is still 26,000. Okay. Next year, if all is kind of accurate with the logic that I had. So the price of Bitcoin would need to reach about 52,000, right? It will have to be, even with the 30% sort of safety margin that I'm plugging in here. Maybe that safety margin should be 50%. I mean, maybe. Let's say somebody could operate at half of the cost of US companies, and therefore only they will make money, everybody else will lose money. Eventually, US companies are just going to go out of business, which I don't believe. Let's say it's 50%. Well, still Bitcoin needs to rise to 37,000 within a year. And if it does, and with this the most conservative of assumptions, we're saying that price of Bitcoin needs to go up within a year and a half-ish by about 60%. That's how the formula would go. So 60% growth in a year and a half, maybe, after having give it another 6 months for the market to kind of munch and chew on it. So even in the most conservative of scenarios that I could envision, there is still a 60% upside. Now, today's price is not 23. Today's price is 27,000 already. So there is a little bit of less of an upside left, right? So we're saying 43,000. Well, actually, I wonder how that math worked. I'm guessing this is the same 61, right? So we're taking, it needs to, gross is needed 60%. No, yeah, it's because the price is fixed. So never mind. Kind of forget the math. I need to figure this out a little bit better. 160%. Yeah, there seems to be something stuck here. Either way, it needs to go up from 43,000 from, let's say, 27,000 that it is today. Now let's go back to 23. Let's put in 27. I still want to get this done. 27,000 right in front of you. 27,000. It's not percentages, it's actual units. 27,000. So what is the gross needed to be for this? 38%. Okay, so in the most conservative of scenarios, I'm saying there's a 36, 38, 40% upside for Bitcoin in the most conservative view that I could only think of. That's with people operating at like $18,000 break even. So here you go, folks. I still believe in Bitcoin. I don't think it's going anywhere. There are two candidates in the United States, presidential candidates. They already said support for Bitcoin is there. Hong Kong is allowing now people to buy Bitcoin, which probably means the rest of the China will be able to. It's not dying, and if it's not dying, the halving is going to have a tremendous effect on it. And with some sort of sanity, I would say that this conservative scenario is not realistic. US mining firms are not going to go out of business. They still need to operate. They need to make some sort of money. They're not going to be completely losing it. So this conservative 50% kind of reduction in the costs, I don't think that that's feasible. We're likely going to see way more than 38% growth in Bitcoin. So just gotta wait and see if I'm right. There's always risk. As I said, this is not advice. Don't put all your money into it. Perhaps put some money into it. If you want to buy through hard wallet and buy the actual Bitcoin, like the actual crypto, that's fantastic. If you want to buy in the markets through an ETF sort of instrument, I've covered it in my previous video. Other ways of playing it through futures market. There's probably other ways of playing the trend. It may not need to be Bitcoin. I mean, if Bitcoin goes up, probably ETH is going to go, probably XRP, probably a couple of other altcoins are going to just skyrocket. So that's another way of doing it. There's a lot of way of playing this, so long as directionally you believe in what I covered here and you also agree that there's a huge upside in this particular scenario. So thank you so much for listening. I appreciate any comments, clicks, likes, subscribes, and see you in the next week video. Thank you.